Welcome to the Deep Dive, the show where we cut through the noise and zero in on the insights that really matter. Some of the most compelling stories in business aren't always in flashy tech, but sometimes in these essential, often kind of overlooked sectors that keep the world running. Today, we're taking a deep dive into exactly one of those companies, a global powerhouse in pest control and hygiene services. Our mission today is pretty straightforward. We've got a stack of recent sources, specifically a research report from Compasscope and the company's 2025 half-year results call transcript. We're going to sift through these and pull out the most important nuggets of knowledge about Rentokil Initial, that's ticker RTO. The goal is simple: for you, our listener, to walk away well-informed quickly about this, pretty fascinating business.
That's right. And, when you think pest control, maybe you picture a local outfit. But Rentokil Initial operates on a, frankly, massive global scale. What's really interesting here is how their services, which might seem niche, are actually tied into huge global trends. Things like urbanization, climate change affecting pest migration, and, of course, the ever-increasing demand for better hygiene standards. So, yeah, it's much more than just getting rid of some bugs. It's about essential services.
Okay, so let's unpack the company itself. Rentokil Initial PLC, it's a truly global provider, right? Pest control, hygiene, and these well-being services. And they serve pretty much everyone. Homeowners, big commercial clients, even governments across, 89 countries?
89 countries, yeah. It's a huge footprint. And a big part of their operational model is this idea of route density, basically making sure their technicians can hit multiple clients in a small area very efficiently. That's how they scale and spread their costs.
Right, makes sense. So what's the main business?
Pest control, that's the big one. The vast majority of their revenue covers everything, rodents, insects, termites, mosquitoes. And it's split, basically, between residential, so homeowners, and commercial businesses. And a really key point now is that North America is their biggest market, especially after they bought Terminix. That was a massive deal.
Okay, Terminix. We'll definitely come back to that. Beyond pest control, what else there? You mentioned hygiene and well-being.
Yeah, that's their secondary line. Hygiene includes things like hand dryers, air fresheners, premium scenting for businesses, clinical waste disposal, washroom services. Pretty comprehensive. Then the well-being side includes Ambius, that's their brand for indoor plants, and air quality solutions, mostly for offices. And they also have some services targeting the needs of aging populations.
Interesting. And you mentioned they're refining their focus, too.
Exactly. They had a workwear segment providing work clothes, but that's now listed as discontinued. They sold off the French part of that business, or in the process of it, this year, 2025. It really shows they're doubling down on core pest control and hygiene. They do have some other specialized bits, too, like Ambius, we mentioned, VDCI for mosquito control, Steritech for food safety audits. Smaller pieces, but they fit.
Got it. So big picture, core business is pest control, heavily supported by hygiene and well-being. Then you've got divestments like workwear and these smaller specialized services tucked in. It definitely sounds like a business built on recurring needs. Now, you mentioned scale and route density. Let's really dig into their competitive advantages. What makes Rentokil stand out? And maybe more importantly, where are they vulnerable?
That's a great question because, yes, their scale is massive, operating in, 98 of the world's 100 largest cities. That global reach is undeniable, and they are absolute machines when it comes to acquisitions doing 40 to 50 bolt-ons a year. That helps build density. But, and this is a key insight from that Compasscope report, these advantages, while real, might not be quite as sticky or defensible as, say, their main rival, Rollins.
Okay, so where's the weakness then, if they're so big and buy so much?
Well, what's fascinating and challenging for them is that huge Terminix deal. It's brought significant integration risks. We're talking issues with keeping customers, keeping employees, problems with getting new leads, sales execution, particularly in North America, is hitting their margins there. And another point, brand. Rentokil has awareness, sure, but it doesn't seem to have the same kind of intangible asset strength as Rollins does with its Orkin brand.
Intangible assets, like customer loyalty, that sort of thing.
Exactly. Things like brand reputation, customer loyalty, maybe proprietary processes. Orkin seems to command better pricing power and loyalty. Rollins has this thing called the BOSS system, which drives efficiency. Rentokil is still working on building that really deep customer connection, especially post-Terminix.
That's a really clear distinction. Okay, let's stack them up then. Rentokil versus Rollins.
Well, Rentokil wins on sheer global presence and its aggressive M&A strategy for geographic expansion. Rollins, though, seems to win on operational efficiency that BOSS system helps, and brand power with Orkin. That translates directly to better margins and customer loyalty. So it's like Rentokil is wider, but Rollins might be deeper and more efficient in its core markets.
And what about Anticimex? They're another big name.
Anticimex is interesting. Rentokil definitely has more scale and reach. But Anticimex is really pushing hard on technology, particularly IoT, Internet of Things for pest control. Think smart traps, sensors. That could be disruptive, offering efficiencies Rentokil might be lagging on. It's sort of scale versus tech focus.
Right. And then there are all the smaller local guys. They must be competitors too.
Oh, absolutely. Rentokil has huge cost and scale advantages over them, obviously. They can invest in marketing, IT, training in ways smaller players just can't. But those local players often survive, even thrive, on personal relationships, deep local knowledge. They offer a customized touch that's sometimes hard for a global giant to replicate everywhere.
Okay, one more. Ecolab Pest Elimination. How do they compare?
Rentokil has a broader reach, especially into residential. Ecolab is very strong in the commercial space, particularly good at cross-selling pest control with their other hygiene solutions. They have a very data-driven approach for commercial clients, a bit more specialized than Rentokil's broader offering. So summing it up, Rentokil's scale is immense, but its competitive moat maybe isn't as deep as Rollins. And these Terminix integration issues and perhaps weaker brand intangibles are definitely material risks.
Okay, here's where it gets really interesting then. Despite those challenges, Rentokil clearly has a growth strategy. What does that look like?
Yeah, it's pretty multifaceted. First, those bolt-on acquisitions we keep mentioning, 40 to 50 a year, smallish deals to beef up density and scale in markets they're already in. Second, integration, especially the massive Terminix integration. The big goal there is hitting a 20% operating margin in North America, maybe around 2027 to 2029, by finding synergies like combining back offices, harmonizing pay, closing overlapping branches.
Right, so it's not just buying companies, it's making them work together profitably. What else?
Exactly. Third is organic growth, growing the business they already have. They're trying to boost this by opening more satellite branches for better local coverage, overhauling how they generate leads, improving their online search presence, and trying to cross-sell more between pest control and hygiene. They're also leaning heavily on data analytics now, trying to get really granular branch-by-branch performance data. That helps spot problems and refine the integration. And strategically, like we said, selling off things like workwear to focus squarely on pest control, which is now over 80% of revenue, plus hygiene and well-being. Plus, expanding further globally outside North America and riding those sustainability tailwinds from tougher hygiene rules.
That sounds comprehensive. How does it stack up against how their competitors are growing?
It's quite different in emphasis. Rollins, for instance, really prioritizes organic growth, relying on its brand and systems. M&A for them is more secondary, smaller deals usually. Anticimex, as we noted, is very focused on tech-driven growth, that IoT angle. Ecolab Pest Elimination leverages cross-selling in the commercial space using data and the smaller players. They grow through relationships and local reputation, mostly. So Rentokil's heavy reliance on M&A, especially large-scale M&A like Terminix, is pretty distinctive.
Okay, so looking at that strategy, what's the potential? How achievable is it? And what are the big risks?
Well, the potential is significant. Integrating Terminix successfully could add a lot to market share and profitability, especially if they hit that 20% North American margin target. That would be huge. And remember, the overall pest control market is growing nicely, projected at like 6.2% CAGR globally for the next decade. That's a strong tide lifting all boats.
But the achievability, especially with the Terminix issues you mentioned.
That's the key question. Rentokil does have a history of successfully buying and integrating companies. So, they have the know-how, in theory. However, the current struggles with Terminix customer churn, lead generation problems definitely make hitting those ambitious 2027, 2029 targets riskier. No doubt about it. As for risks, obviously integration failure is number one, but also intense competition from Rollins and Anticimex isn't going away, and a big one. They're now heavily reliant on North America's 63% of revenue. So performance there is absolutely critical. Any slip-up has a major impact. Plus, eventual market saturation in mature markets is always a long-term risk.
Right. So the strategy has potential, especially post-Terminix, but definitely faces real achievability risks, which naturally leads us to execution risk overall. What does this all mean on that front? Yeah, execution risk is definitely higher for Rentokil right now compared to its main peers. It really boils down to a few key things. Number one, obviously, is Terminix integration. The challenges in keeping customers and staff, getting sales going, fixing lead flow is directly impacted their growth and margins in North America. And the fact that only, 15% of branches are fully integrated, that tells you there's still a long way to go. Hitting that $100 million cost-saving target by 2026 is a big ask while managing the day-to-day business.
And like you said, with North America being 63% of revenue, any wobble there is magnified across the group.
Precisely. Stabilizing North America is job one. Beyond that, just managing a business across 89 countries is inherently complex. Then there's the ongoing acquisition strategy itself. Doing 40, 50 deals a year, even small ones, carries risks paying too much, integration slip-ups, especially when management focus is already stretched by Terminix. And finally, they really need to execute on improving customer retention, that Drive of 85 program in North America, getting it up from around 80% and making their lead generation more effective, all while dealing with macro stuff like inflation and weather impacts.
How does that compare to the execution risk for their competitors?
Well, Rollins probably has the lowest execution risk. They grow more organically, rely on proven systems, strong brand, less dependent on big complex integrations. Anticimex has moderately high risk, I'd say, because their strategy relies heavily on successful tech adoption and scaling that technology, which can be tricky. Ecolab Pest Elimination may be moderate risk, lower than Rentokil because they're more focused commercially and less acquisition heavy, and the small regional guys, minimal risk, but also minimal scale and ambition, usually. So yeah, bottom line, Rentokil carries a higher execution risk profile right now, mainly due to Terminix and the sheer pace of their acquisition model.
Okay, let's pivot to the latest numbers then. Straight from their 2025 half-year results call transcript, this was July 31st, 2025. What did we learn? Group revenue was up 3.1% to $3.36 billion. Organic growth, so excluding acquisitions and currency effects, was 1.6%. The group adjusted operating margin landed at 15.2%. That was down 1.2 percentage points, or 120 basis points, year over year. And that drop was expected, right? Driven by those North American issues we've been discussing. Cash flow looked pretty healthy, though, 93% conversion.
That's right. And digging into North America specifically, organic growth was 1.1% for the half year. But encouragingly, Q2 was better at 1.4%, up from just 0.7% in Q1, so maybe some signs of stabilization there. The adjusted operating margin in North America, though, was 16.9%, down a hefty 7.3 percentage points. That really shows the impact of cost inflation and lower volumes, even though they managed to get some price increases through. That's where the pressure is most acute.
So they know it's an issue. What are they actively doing about it in North America, and are they seeing any green shoots?
They're definitely active. One big shift is in marketing, moving towards more organic lead generation, less paid ads, more focus on things like local SEO, community outreach. Part of that is rapidly opening more satellite branches. They went from 36 in Q1 to 100 by the end of Q2, and they're targeting 150 by year-end. That's fast. Brand awareness for Terminix seems to be ticking up slightly too. And here's a potentially significant positive sign. In June, their inbound leads for residential pest control and termites grew 6.6% year over year. That's the first positive month this year.
Okay, that is encouraging.
Yeah, and a pilot program for door-to-door sales also started, apparently generating about $12 million in annualized sales early on. They're also making progress using data analytics for better branch-level insights. And importantly, the actual Terminix integration work is set to restart in the second half of the year, focusing on the commercial branches first. They're refining the process based on lessons learned. They're still holding on to that target of $100 million in cost savings and getting North American margins above 20% eventually, but they did signal that full branch integration might now stretch beyond 2026.
Okay, so progress, but maybe taking a bit longer. What about the rest of the world? The international business, 37% of revenue.
International looked pretty solid. Organic growth was 2.7%. Pest control was the stronger part there, growing 3.8%. Hygiene and well-being was a bit slower at 1.1% organic growth, apparently held back by tough conditions in the UK and the Pacific. But Europe and Asia, Middle East, North Africa, Turkey, that region performed well. And the operating margin for international was healthy at 19.3%. So yeah, outside North America, the business seems quite robust.
Now let's touch on something potentially tricky, termite litigation in the U.S. What's the update there?
Right, this is definitely something to watch on the financial side. The good news is the number of open claims is down 23%. The bad news is that the really complex litigation claims, particularly those outside a specific area in Mobile, Alabama, have actually increased. And the average cost per claim is up 9%. So they've had to increase their provision. The money set aside for this from $236 million up to $276 million. It's an ongoing cost pressure.
Got it. And the workwear sale you mentioned, is that proceeding?
Yep, the divestment of the French workwear business is on track to complete in Q3 or Q4 this year. The valuation is around $465 million gross, netting them about $420 million in cash. This really helps them sharpen their focus on the core pest and hygiene businesses. It's a clean, strategic move.
Okay, zooming out one last time, industry trends. Is this a good sector to be in?
Oh, yeah, absolutely. The global pest control industry has basically doubled in size over the last 10 years. It grew at about 6.6 per 6 PAGR to hit around $27.3 billion in 2024. And forecasts suggest it could nearly double again by 2034, growing at maybe 6.2 per CAGR to reach $50 billion. The drivers are really powerful structural trends: climate change messing with pest habitats, more people living in cities, rising hygiene standards globally, and the hygiene and well-being market is also expected to grow steadily, maybe around 4% annually.
Yeah.
So yeah, the underlying markets are definitely healthy and growing.
Okay, so we've covered a lot. The business structure, the competition, the growth plans, the risks, the latest updates. Given all of that, what are the absolute key things for you, our listener, to keep an eye on when thinking about Rentokil Initial going forward?
I think you can group them into a few critical themes. First, and it's the elephant in the room really, the North American turnaround. Is the Terminix integration actually delivering? Watch for progress towards that $100 million synergy target and the 20% margin goal. Tied to that, are customer retention numbers improving? Is that drive to 85 working? And are the new marketing tactics, like the satellite branches and organic lead gen, actually boosting growth? North America is just too big to ignore.
Makes total sense. Theme number 1, fix North America. What's second?
Second theme, I'd call it scaling smartly and staying agile. Keep watching those 40, 50 bolt-on acquisitions a year. Are they getting good returns? Or just adding complexity? Also, how are they holding up against competitors? Can they close that margin gap with Rollins? How are they responding to tech disruption from Anticimex? Are they innovating enough themselves? And don't forget, the international business is continuing to deliver solid growth outside of North America.
Okay, scaling smartly. And the third theme?
Third theme, navigating external headwinds and portfolio focus. How well are they managing cost, labor, fuel, etc.? Can they pass on price increases to protect margins? Keep an eye on that termite litigation. Are the costs contained, or do they keep rising? And how is the hygiene and well-being segment performing? Does it recover and contribute meaningfully to growth? And finally, did they successfully complete the French workwear sale and put that cash to good use in the core business? These are all about managing external pressures and staying focused.
Okay, those are really clear buckets. North American turnaround, scaling smartly, and navigating headwinds. So here's a final thought for you, the listener, to chew on. Rentokil has incredible global scale and a proven acquisition playbook, but they also face these huge Terminix integration hurdles and increasingly tech-savvy competitors like Anticimex. So how crucial will Rentokil's ability to really localize and execute effectively at the ground level, things like those satellite branches, better lead flow, maybe even using AI for things like predicting customer churn be and deciding its future? Will that operational refinement allow them to truly dominate the global pest control market for the next decade? Or could their massive scale actually become a burden, a liability, rather than their greatest asset? Something to think about until our next deep dive. This content is produced by Compasscope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.